Hi there, and welcome back to the Financial Focus. I'm your host, Scott Forehand, and today we've got a conversation that I think is incredibly timely. We're going to bridge two worlds that most people rarely hear discussed together. We're going to do this in a practical way, and we're going to talk about traditional financial protection and the rapidly evolving world of digital assets and cryptocurrency. Our guest today is Paul Bein. Paul has a fascinating background. He's been a guest on this show before, and we're excited to have him back. He's someone he is not someone who's just shown up to the industry. He's been involved in financial services from multiple angles for decades. Before entering the insurance and retirement planning world, Paul ran a very large mortgage brokerage during one of the most dynamic time periods in lending history. He also worked as a trader, an investment advisor, and today he works in the insurance underwriting side of the business while also actively studies and invests in cryptocurrency and the markets. So as this combination of new and old philosophies starts to coalesce in today's society, this I think is really what brings this episode into the forefront of why it's so timely. A lot of people today are financially confused. They're hearing one group say the stock market is the answer. They'll hear another group say life insurance is the answer. And then they'll hear another group say, you're all idiots. The only thing that's worth doing these days is Bitcoin. And Bitcoin is the future and the dollar's collapsing tomorrow morning. Yeah, we've heard it all. So most people are caught somewhere in the middle, trying to figure out what's real, what's hype, and what actually works long term. Well, what I really appreciate about Paul is that he's been around and been through multiple financial cycles. He's watched markets move. He sees what happens when people overextend in mortgages. He sees investors' psychology. He understands risk. And now that he's watching the cryptocurrency world evolve in real time, he's still working with families and still working in retirement planning, traditional things that we do, life insurance, wealth protection, long-term financial stability, and he's being successful. It's never been more important in financial planning to leave emotion at the door. And one of the biggest mistakes people make is confusing speculation with strategy. And that's why one of the things that I really like about Paul is he's able to really qualify and quantify those two differences, especially when we're not talking about you got a gut feeling that something's going to make it, or you really hope this works. That's not what this is about. There's nothing wrong with investing aggressively if you understand and take action to mitigate the risks. There's nothing wrong with cryptocurrency if you understand volatility. And there's nothing wrong with growth-oriented investing. But there has to be a foundation for all of it. And that's where insurance and retirement planning often intersect and become key players in that conversation. Because while everybody loves talking about making money, very few people spend enough time talking about protecting money, transferring wealth efficiently, minimizing taxes, creating predictable income streams, or protecting families when life doesn't go according to plan. The reality is this: financial success is usually not built from one giant lucky move. It's built from consistency, from discipline, protection, smart decision making over long periods of time, consistently making the right decisions. What makes today's conversation interesting is that Paul lives in both of those worlds. He understands traditional financial principles. He also pays attention to emerging technologies, digital currencies, blockchain adoption, and where the future might be headed. So today we're going to talk about both sides of that equation. We're going to talk about what excites him in the crypto world, what concerns him in the crypto world, and what he thinks people misunderstand. We'll also discuss retirement planning, probably dip into life insurance a little bit, underwriting questions maybe, market volatility, things that families should really be focusing on right now in this uncertain economy. So without further ado, Mr. Paul Bein, thank you so much for joining us today. I don't, I can't thank you enough. I know this was relatively short notice, but I appreciate you being with us and acquiescing to my request. How are you doing today, Paul?
I'm doing good. I'm always happy to squeeze you into my schedule.
Right on. All right. So we've got anything you want to say before we get rocking and rolling?
No, let's just get into it. I mean, I was on before. A lot of people heard my story a little bit and my background. I appreciate the kind words. And yeah, I mean, age has benefits. We've lived through cycles. I
Right?
wish I knew now what during the more
Oh man.
2007, during COVID,
Yep.
I'd be in a whole different spot. I'd be
Yep.
doing this from my beach in Tahiti or something
Right.
if I knew what I knew now. So, but it's all
Exactly.
right. Still never too late, to get in the game.
Right. All right. So let's talk about you for just a minute. You had a really early, unique career path. You in the mortgage brokerage and the stock trading side, the investment advising, and now insurance. So you've had a really unique path. What originally drew you into the financial world?
One day I was working on Lakeshore Drive on a high-rise construction site. It was 40 below, standing
Is that
around a garbage
Chicago?
can in Chicago
Yeah.
on Lakeshore Drive. And I'm like, dang, there must be an easier way to make a living. And someone said I should get into sales. And so I applied, and my first position was Series 7 commodities futures trader at Chicago Board Exchange. My wife at the time thought I should get like a service job, like a snap-on job with a truck driving around. And I just took it literally. So I went right into 100% commission and went into the
There you go.
broke commodities future side of it, and really haven't looked back. And to your point, I evolved and worked. I was never afraid to try new paths, and been licensed in NMLS for banking side. Securities license, life and health license, and you know, it just makes that person, a little bit more well-rounded
Okay.
to help your clients.
And from that point, you transitioned and you eventually landed running mortgage brokerages. Tell me about that. How'd that happen?
Yeah, I was just looking at some alternatives. There was this securities firm I was working at. There were some changes going on, and I just did some research, and an opportunity fell in my lap. And I had to start at ground level as a loan officer, and got into the banking for a private lender. And it was sales, and learned that side of it. It was mostly government loans, and I learned how to securitize and package up loans. And we're a private lender, and we package them up at bundles to their VA loans. So they went to Johnny Mac and so forth, and so that just opened a whole different avenue, and liked it. And the money was really good. I was very
Right.
fortunate to make seven figures there, and I was a director, and ran teams, ran 13 states, and I loved it. I'm just the same energy that I had when I was working, at Chicago Board. Same thing, just high energy, and just like to have impact. And over my career, I realized it's just I could make a huge difference. Just provide financial literacy for my clients, and educating them on different products that I was, privy to at the time.
Is there anything in particular that you can say that you learned or a lesson that you took away from working in the mortgage industry that has shaped the way you think about money or risk or any of the things that you do today?
I mean, it led me to building my own real estate portfolio. Being in the on the lending side just was, and understanding how I could finance different vehicles. I probably would have never been as creative as I was investing in my own portfolio. And obviously consulting clients how to hold those portfolios in regards to different entities and so forth. And that just opened my world up to not being one dimensional. Futures and stock market was one. And it's kind of funny if you look at my path, all these different doors open, and it was just leading me in that direction of how I wanted to diversify. I actually lived it, how to diversify my portfolio, and continued on over time.
Right. In your opinion, looking at the landscape today, what are some of the biggest financial mistakes that families are making right now when it comes to retirement preparation?
Hmm. They're not seeking, I'll say this probably the try to be as kind as possible. They don't seek enough advice, and the advice they get, they don't implement,
Yep.
and they listen to the water cooler conversations of individuals that don't have a pedigree to back up those thoughts. And that, unfortunately, just because they're all doing it or they're saying they're doing it, they may not even be doing it. And I've seen it firsthand in personal experience of talking to friends and colleagues. And I want to go to someone that has a pedigree or well-rounded and just get a difference of opinion on what I'm doing, or just get overall view of your portfolio. And unfortunately, maybe it's just individuals are just scared, which is possible, but they're not. There's so much, and I know I'm going around in circles on stuff, but I think there's so much information out there. It can be, you know, quite confusing for individuals. So I I
Yeah,
think
I have that conversation with my wife all the time.
yeah.
We'll talk about something and she'll say, "You know what I just heard? I heard blah 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 and blah blah blah." I said, "Yeah, where'd that come from?" "It came from TikTok." And then my
Yeah.
knee jerk response is, "Yep, everything you see on TikTok is 100% accurate, right?" Okay. All
I
right.
would I would just want to add one thing is that I would recommend is that if you're gonna you should interview your consultant or whoever you're going to talk to, and then don't do business with that first person. Interview multiple people just to kind of educate yourself on what you're doing,
Right.
and just get eyes on what you have and get an opinion. You don't
Yep.
have to take their opinion, and then
Yep.
you make your own decisions as time goes on. So yeah, go ahead with your next
Yeah,
question, Scott.
and just piggybacking on what you just said, if you end up finding, like, you do multiple reviews and you have multiple different people review what a plan should be or could be, if there's consistency across the board, then that really is where you should be, and that would make sense to when you get a congruence like that where you've got multiple people saying the same thing. That's probably what you ought to be doing.
Yeah.
All right.
And I'm sure you're doing it as well as I'm. If I'm looking for something outside of my expertise, and if I'm interviewing attorneys because I want to look in trusts,
Right.
different avenues, CPAs, I have interviews and I want to see if they're good for my team. And
Right.
that's the way a client should approach it.
Yep. Yeah, we do the same. I do the same thing. I have a list of people that I've interviewed and that I've reviewed and referenced, and these are people when it comes to a program that would be appropriate that's outside my purview, like the setting up of a trust
Right.
or a charitable remainder program or things like that. Something where I really need to get a JD involved, then I'm going to use that too. And I've got
Right.
people in my back pocket to do that with. Yeah, that's a really good, that's strong advice. All right. So let's talk about life insurance for a second. A lot of people think that life insurance is only about leaving behind a death benefit. What are some of the other additional benefits from you that you think people should realize, both in the form of living benefits that life insurance programs might have, to some of the financial strategies that certain types of life insurance would lead themselves towards?
Yeah. So I think of life insurance, back in my grandfather's days, it just had one function and one purpose. And as time, the industry has evolved, and I don't think, people do what their parents did, and or they take advice from their parents, and they're not looking beyond that.
Right.
Now life insurance, I, you know, I have conversations that if you have a life insurance policy, if it's not doing multiple things for you, then why have it? It has multiple functions. And if I'm looking at anything, if I can get multiple income streams or multiple more value out of that product. And for example, if you're gonna have life insurance, why don't you have something that has living benefits? That's a pretty common topic nowadays, but you know, to me, it just in a simple form, if you have a $300,000 policy, technically you have a bucket of money that you can access due to a sickness or injury. So, and that's a good perspective in explaining it. But let's say, how about a policy that if you never use it, because no one plans to die, and if you use a term for a specific reason, there's no need for it over a period of time. Let's say for a mortgage,
Right.
pay off the house. Now it's not a need; it may be a want, and you may have to that policy may have to evolve to something else. But
Okay.
who says that after 30 years you can't get all your money back that you put into it?
Right. Yeah, and if they're structured properly, that usually is what happens, or certainly
Right.
some gains in there as well.
Correct.
All right, so you are one of the people that I know that's heavily engaged with the crypto market, and you're one of the people that when I'm looking for crypto advice, I usually call you. So when you're in this process of paying this additional attention that you're doing to crypto and blockchain technology, what first got you involved, or what first interested you about those new and growing technologies?
Honestly, mostly curiosity, and that was probably recent in the last. I mean, I honestly, when first Bitcoin came out, I was one of those people that they thought it was a good thing to buy goods. So I bought pizza on Bitcoins. Who'd have known it'd be hundreds of thousands of dollars?
Whoops.
Well, $80,000 right now. Or I probably have a wallet somewhere and I have no idea how to access it. Two or three Bitcoin and it may have still in there. But anyways, um, but if you're listening to what's going on, the world is changing, and digital currency is going to be evolving. It's already happening. In large banks, they're started adopting it. In fact, there's legislation going on, and one of the things that you hear about is Clarity Act, and everyone's like, "What's that mean?" Well, it is what it is. You know, for the surface, is that gives more clarity to the industry, and it's going to get a lot of the where people fear is meme coins that are junk investments and don't really have tangible value. But there's something to it because the Clarity Act is kind of hung up right now because of banks and exchanges wanting to have different views. I love crypto because you can actually stake and earn good yields on it if you know what you're doing. The second thing is they're already tokenizing stocks in a world that's going to come down. I don't know how soon, but probably under 5 years. Is that there's what's the need for the exchanges because everything's going to be tokenized. I mean, that's kind of the direction. I don't know what that looks like, though. I'm
Well,
not
I'm sure
predicting
that
anything.
the big brokerage houses and things like that are going to push back against that technology and that legislation. So
Yeah,
I think it's a nice idea, but I don't think there's any, at least not right now, unless something changes. There's very little possibility that that's going to become the
yeah.
standard.
Well, sure. Banks are already pushing back too because they don't like that you can stack or stake on exchanges, and versus that's going to take yield,
Yeah.
them depositors investing in banks. So there's
Yep.
there's a lot of conversation, but ultimately, it is the wave of the future. They're going to have to do something about the dollar, and they're adapting changes, and I would rather be ahead of that curve than behind it because once technology moves fast, and who knows, 5 or 10 years, you're going to have to adapt to it.
All right, let me ask your opinion on this.
Yeah.
So, do you believe cryptocurrency is going to become a normal part of long-term financial planning, or do you see it continuing as more speculative? And if you
It's going to
think
be
it's going to become part of the long term, when do you think that's going to happen?
um, it's got to be long. It's definitely long term, and a lot of I mean, crypto. If you look at stocks, there's small cap, mid cap, and blue chips. The blue chips are going to be long term, and a lot of that other stuff is going to fall off, just like the stable coin laws, so forth. But there's necessary vehicles to keep this machine moving. One is XRP. XRP is being adapted to, Japan, Bank of Japan just adapted it. World banks are adapting it. And those are transactional platforms that exchange, the days of bank holding funds for 3 or 4 days is not going to happen. These are going to be instant transfers.
Yep.
and the adaptation of where countries are going right now and forex currencies, the money, the movement of money right now, they're going to have something implemented, and that kind of goes along with quantum computing and so forth, and that change in the financial markets.
All right. So when people are investing, there's different, like the way I think of it is each dollar has a specific purpose in the future.
Mhm.
And when you're using that kind of thought process, there are things that are going to come in and potentially negatively affect that dollar. And those things would be things like inflation, different types of banking systems, taxes, market volatility. How do you balance the growth opportunities, dollars that you would spend for growth, with financial protection, dollars you would spend for financial protections, or stability, dollars you would spend to have a stable retirement plan? Do you have a balancing method?
I mean, that's a great question. I mean, like a diversified portfolio path.
Okay, could be. Is
Yeah,
that
I
is that
mean,
what you're doing? How do you personally balance your opportunities?
honestly, if you want to go the direction of infinite banking, to me, that's the better balance
Okay,
on control of assets, and repurposing those dollars multiple times.
right.
Um,
Love
I
it.
mean, if you understand, obviously you do, but if you use your participating whole life, it can be a liquid account that you can have access to, and you know,
So
the
you're
exchange.
saying
Go ahead.
mitigate some of the volatility by putting your money into market programs or maybe market exposed programs where you have no loss guarantees but have the money available to you, so when you have an opportunity for growth you can
Yeah.
take it, or when you
Yeah,
need
so
to put.
yeah, okay, I see where you're going with this. Yeah, I don't park if I'm going to park money and for long-term investing, I'm using stable coins or my participating whole life because the dollar value and there's opportunities to keep pace with inflation in both those vehicles in regards to growth.
Okay.
Um, but the crypto is not that's a small part of my portfolio
Okay.
to balance it. Real estate, tangible assets. I mean, the hot topic right now is precious metals, silver and gold.
Yeah.
Silver just hit 80 today. Gold is like 4,800, something like that.
Oof.
Um,
Yeah. Love
Oil's
it.
going down, so that's just all driving factor. New Fed change. So,
Right.
you know, yeah,
All
I
right.
think there's a lot of pluses and positives that's going on right now.
All right. Last two questions. So when you sit down with clients today, what are people telling you most of the time? What's their biggest concern? What are they most worried about?
Yeah, I mean, the biggest concern is fear of losing money, or the bigger the bigger concern is, outliving the money or not having enough money
Right.
going into retirement.
Yep.
I mean, Social
So
Security is not an option anymore.
yeah, actually, they came out with new guidance on that recently, and they said Social Security payouts are going to drop 19 to 23% in 2034. So, and I'm doing that with my clients right now. I'm looking at where they're projected to be now, and I'm counting on 19 to 23% less than that. And then we're trying to make up the difference using income replacement programs, and
Yeah.
that's kind of where we're going. So here's the final question. If you could give one piece of financial advice to the average American family that's trying to build a better future over the next 10 to 20 years, what would you advise them to do?
Seek help.
There you go.
Interview advisor.
Yep.
Find someone that is on their same path. You know, not every advisor is going to be your cup of tea. I mean, it all depends on your age or your time horizons. Sometimes you have to take more risk because you're a little bit later in the game. But I would say first protect what you have. Be
Okay.
very, very cautious of where you move that money, even if it's in your personal bank. Keeping large sums of cash in your bank may not be the greatest idea now.
Right.
Actually, it's not the greatest idea nowadays because of what's going on potentially down the road. And I'm advising my clients there's some things going on right now that they should be concerned about and well planned. Cycles have come around. We just went through 2007. We went through
Yep.
COVID. You know, Fed's at $40 trillion in debt. So that's a making of some challenges, and you have to be well diversified. Look at your 401k. Are you overly exposed, and do you want to protect some of that principal and take money off the table and use something that seek your obviously your advisor on that, but be
Right.
a little bit more cautious. It's better. I look at this. Buffett has almost everything he owns in cash. There's a reason for that.
Yep.
So those are things you got to keep a pulse on and look out there and make sure you're not overly exposed because you can't afford to lose what you got because right now a
Right.
lot of people don't have a lot to lose. So
Yep. Love it. All right, Paul. Well, thank you again. Thanks for spending some time with us today. I wish you the best. I look forward to seeing your success and following
likewise,
you. And maybe we can get you back in a couple months and have a crypto check-in.
sounds good, sir.
All right.
Appreciate it.
Thank you, Mr. Bein.